Hello, everyone. If you're a trader or looking for a serious proprietary trading firm with the potential for immediate real capital and aggressive scaling, stick around until the end of this video because today we're talking about one of the most respected firms in the market, the 5%ers. But before you think this is just another prop firm review, let me tell you something. Have you ever stopped to think that you might be just one decision away from changing your life as a trader? Maybe what's keeping you from reaching the next level is a push, access to larger capital, or even a shift in mindset. And that's exactly what the 5%ers promises. Today, I'm going to share the story behind this firm, how their plans work, the rules you need to follow, and, of course, my opinion on whether it's worth it or not. So, take a moment to drop a like on this video, subscribe to the channel so you don't miss any Forex and prop firm tips, and let's get started. The history of the 5% heirs. In 2016, two professional traders, Gil Ben-Hur and Ohad Golan, had a light bulb moment. There are so many talented traders out there who just need a chance. And that's how the idea for the 5% heirs was born. They wanted to create a proprietary trading firm that wasn't just another company charging high fees only to drop you at the first broken rule. They aimed for something serious, something that would reward traders who truly have potential. And listen up, this is important, because there are plenty of firms out there just looking to profit off of you. But the 5% heirs is different. They're genuinely focused on finding consistent traders. And here's the thing, if they're willing to trust their money in your hands, it's because they believe you can deliver results. Now, here's their big differentiator. Unlike many firms that set crazy profit targets, the 5% heirs focus on consistency and risk management. They're not looking for traders who can make 20% profit in a week only to blow up their account the next. They're looking for traders who know how to stay in the game for the long haul. And that mindset makes all the difference. I know a lot of people are wary of proprietary trading firms, and rightfully so, right? After all, there are some that just want your money. But honestly, the 5% heirs approach offers more security. They want to grow alongside you. It's a win-win. The 5% heirs was founded with a clear purpose: to find traders who aren't just lucky or making one miraculous trade, but traders who are consistent. If you believe you fit that profile, this might be the opportunity for you. But hold on, now let's talk about their plans and rules. Alright, now that you know how the 5% heirs got started and that they're genuinely in the market to develop consistent traders, let's get straight to the point. What plans do they offer and how can you get funded? The good news is that there's a plan for every type of trader. Currently, they offer 3 types of plans, so you can choose the one that matches your trading style. And don't forget, the link in the video description will give you 10% off any plan. Plan 1, Hyper Growth. Let's start with the plan I think is the most aggressive and, for many traders, the most attractive: hyper growth. You've probably heard the phrase, no risk, no reward, right? Well, this plan is exactly that. A fast track to scaling your capital exponentially. How it works: you start with an immediate real account. No demo accounts here. You'll be trading real money from the start. Every time you make 10% profit, your capital doubles, and then doubles again, and again, until you reach an incredible $4 million. Now, think about that for a moment. That's a massive amount of money. And the best part is you don't need to risk your own capital. You just need to do what you do every day. Trade with consistency. Profit split. Traders start with 80% of the profits. And as you move up the levels, you can earn up to 100% of the profits. Yes, you heard that right. 100% is all yours. To be honest, this is the kind of plan that makes you dream big. But at the same time, it demands a lot of discipline. Because as the capital grows, so does the responsibility you're carrying. Stay tuned. In the next section, I'll break down the other 2 plans and how they compare to this one. Plan 2, High Stakes. The classic 2-phase challenge. If you prefer a more traditional challenge with clearly defined goals and a structured process, the High Stakes plan is for you. This is the classic 2-phase model used by many proprietary trading firms. How it works: Phase 1, you need to achieve an 8% profit target. Phase 2, the goal is 5% profit. Pass both phases, you'll receive a funded account to trade with real capital. Scaling: for every 10% profit, your capital increases by 25%. It might seem like a modest increase, but once you start scaling, you'll realize how impactful this can be over time. Fixed salary bonus. Here's another great feature of this plan. When you reach the maximum capital through account scaling, you'll start receiving a fixed monthly salary of up to $10,000. This adds an extra layer of financial security. It's not just about the profit split anymore. You'll have a guaranteed salary to keep trading with peace of mind. This plan combines the thrill of a challenge with long-term stability, making it an excellent choice for traders who thrive on structure and consistency. Plan 3. Bootcamp. For those who want to start small. If you're new to the market and don't want to invest too much upfront, the bootcamp plan is the perfect option. Honestly, this plan is ideal for anyone looking to grow step by step. How it works: the evaluation process consists of 3 stages, and in each stage you need to achieve a 6% profit target. It's a plan with a lower initial cost, which is a significant advantage for beginners. Scaling. For every 5% profit, your capital increases by 25%. This means the plan grows gradually alongside your skills and consistency. I see this plan as a fantastic opportunity for those just starting out in the trading world. You don't need much to begin, and if you remain consistent, you can scale your capital without overwhelming pressure. This plan is designed for traders who are willing to build their foundation steadily and responsibly while still having access to real growth potential. Which plan should you choose? Let's recap to help you decide. Hypergrowth. Perfect for those who want to scale quickly and aim for massive numbers. This plan is all about aggressive growth and big dreams. High stakes. The classic two-phase challenge, ideal for traders who prefer structure and long-term stability, with the added bonus of a fixed salary down the line. Bootcamp. Designed for beginners or those looking to start small and grow steadily with consistency. Each plan caters to a different type of trader, so choose the one that aligns with your goals, trading style, and where you are in your trading journey. Let's analyze the key rules to avoid losing your account. Alright everyone, now it's time to talk about the 5% errors rules. Pay close attention because this is where many traders end up losing their accounts. It might seem straightforward, just hit your targets and you're good to go, right? Wrong. If you don't fully understand the rules, you could get disqualified over something that could have been easily avoided. As traders, we sometimes get so focused on making profits that we overlook the rules. But when you're trading with someone else's capital, the game changes completely. So let's break down the key rules of the 5% errors to make sure you don't make any simple mistakes and stay on track to success. Daily and maximum drawdown. The first rule, and perhaps the most important, is the maximum drawdown allowed. This varies depending on the plan, but typically ranges between 5% and 10%. There's also a daily drawdown limit, which usually ranges between 3% and 5%. Specifics by plan. Bootcamp plan. There's no daily drawdown rule. Instead, it only has a maximum drawdown of 5% for the account. For other plans, the 5% daily drawdown is calculated based on the previous day's account balance. For those unfamiliar, drawdown refers to the maximum loss your account can endure before being disqualified. If you hit this limit, you're out. This rule is crucial to protect the firm's capital and encourage disciplined risk management. Make sure you always keep an eye on your losses to avoid elimination. Second rule, profit target and time limit. When it comes to profit targets, these vary depending on the plan, usually between 6% and 8%. The good news? There's no time limit to achieve your goal. This means you can trade at your own pace without pressure. Pro tip: it's not just about hitting the target, it's about doing it consistently. If you try to rush and reach the goal too quickly, you increase your chances of being disqualified. Think long-term and prioritize sustainable growth. Third rule, prohibition of high-risk trading. Pay close attention to this. The 5% errors strictly prohibit high-risk trading practices. This includes excessive leverage and reckless strategies that greatly increase risk. I know some traders might think, I'll go all in and try to hit the target in one move, but let me tell you, that's not how it works. If you do that, you'll get disqualified in no time. The 5% errors are looking for consistency, not chaos. They want traders who manage risks responsibly and demonstrate long-term potential. So, stick to disciplined and measured strategies to stay in the game. The last rule, and probably the most important, risk management. The 5% errors aren't interested in traders who make quick profits only to lose it all. They want traders who know how to protect their capital. Risk management rules include limiting risk per trade, avoiding large market exposures, maintaining a consistent trading history. I always say this on the channel. A trader who doesn't know how to manage risk won't last long in the market. And at the 5% errors, this is even more crucial. If you fail to respect the risk rules, you can be disqualified, even if you're in profit. Rule summary: stay alert. So just to recap the key rules: respect the maximum drawdown, hit the profit targets within a reasonable time without rushing, avoid high-risk trades, focus on risk management, And remember, the link in the video description gives you a 10% discount on the 5% heirs plans. Don't miss this great deal on your evaluation test. If you're enjoying the video, don't forget to leave a like and subscribe to the channel for more content on Forex and prop firms. See you in the next video.